Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at kind of a divergence between the electronic trading hours and the regular trading hours and how to approach that information. So on Friday, we ended with a relatively weak but down day. But at the end of the day, we ended with a strong spike higher. This morning, we come in with a really big gap up. We gapped up completely above all of Friday's movement. But then look at the first candle of the day, right? Lots of wick on the high, and that wick probably came from a lot of the buyers that closed out on Friday, closing their positions this morning on a big gap up and taking money off the table. But notice that it still closed bullish. And that is a pretty big clue, because that tells us that, even though it's really weak, a move lower may still be bought. The buyers are obviously at least defending it enough to close candles bullish, and that's a good sign that if the lows are broken, you'll probably see them buy. But it's a weak open, so potentially a range-bound environment. We followed it up with that confirmation of a range-bound environment. They try to break lower, and it's bought right back up. The sellers try to get a follow-up bear candle, and they were met with bullishness right back off the bat. That did end up spiking higher with a huge bull candle comparative to, the rest of the way the candles looked. And that's actually a really good sign to potentially sell. You have a big move higher on a range type day. Likely, that's going to get faded, meaning that a big move up is going to get sold or a big move down is going to get bought because nobody's going to believe it anymore. If that were the case and the buyers were here and they were that aggressive, where were they, right? Why weren't they showing up? Yeah, they may be buying the lows, but that's it. They're not buying moves for breakout moves. They're buying down here. So we're likely going to see this move fail, and you can sell that to drive that market right back down again. Now, when that drive down happens, where are we? Well, if this is a range, we are at the range lows. We're actually underneath the range lows, so you want to be looking to buy it back up in the other direction, right? You want to go counter to what you would normally do on a trend day. We're at the range lows. You buy the low. Beautiful move up all the way to the top. Now, when we get to the top, guess where we are, right? We're at the highs of the range. It's the same thing that happened down here, but up here. And that allows you to sell up here and drive that market lower. Now, that one took a little bit of time, but notice what happened here as well. Huge bear candle out of nowhere, bigger than pretty much every candle for the rest of the day. Is that going to be a breakout move? Probably not, right? This is a range day, and we're still actually pretty near the highs. We haven't gone down to the lows yet, so we have a little bit of time. And likely what you're going to see here are the buyers looking at this saying, yeah, okay, Crude, I don't believe you at all, so I'm going to fade into you. So buyers will buy into that move looking for a scalp back to the upside. That did start forming a wedge, and you can see the wedge top held pretty well, but that was on the minds of all of the traders when they saw that big candle right there. They just did not believe it. And you can't really blame them on a range type day. And look where we've gone. We've gone nowhere, right? We're still stuck inside that initial morning range that we formed all the way back at 10 o'clock. We haven't broken out of that area yet. So as long as we're in this, we're looking to buy low and we're looking to sell high. And any breakout attempt or any big move or anything like that is just going to be assumed to be a failure. We're not expecting those to continue. If it is going to continue, you will know very obviously because you will see a breakout type move. And then in that case, at least for the short term, you want to go with that breakout. But that's what we're seeing right now. We have a range start in the morning. All of the traders are fading all of these moves, and it's just a beautiful example of how the psychology of a newer trader would have them trying to sell right here, right? Sell that move down. It broke down. They want to sell it for a continuation. But you have to pay attention to what's going on overall. What's the bigger picture? We're in a range. You don't want to be selling down here. You want to be buying down here. What do you want to do when you're up here? Yeah, this is a very strong move up, but guess what? We're in a range and we're at the top of the range. It's probably going to fail, and you need to sell there and fade the move back down. So just a gorgeous example of technical analysis in combination with market psychology. So hopefully you learned something, hopefully you found it interesting, and we will see you next time.